Good afternoon. Doesn't feel like afternoon with how dark it already is on this side. I'm visiting Amsterdam, which is a great reason to get out of Chicago at the moment. I don't know how the market's doing, but the temperature is very, very cool in Chicago, I can tell you, German. But for today, of course, we're going to talk about the veg oil market. Welcome to our oils webinar, our bi-weekly effort to keep you updated on everything that's happening. Lucky for you, I won't be explaining what's happening. I'll just ask our esteemed analyst German about his opinion on the markets. We have a lot to cover today. We have pressure on palm oil prices. We've seen declines in soy oil prices. There's new biodiesel regulations, which I think we've been talking about for almost every episode, that we're waiting for the new for the impact. So keen to see that. There's a 5 for sunflower seeds, so that's an interesting one, and of course an overall outlook for the price in 2026. Gerben, it's our last edition of this year.
Exactly. Yes. So the next one will be already in 2026.
2026. Well, we're going to make it a good one. If there's any questions that anyone in the audience has, please feel free to ask them. We'll do our best to answer them live on the show. But maybe to start off with palm oil, what's the situation currently looking like, and what's happening with the price?
Yeah, let me share my screen. 1 second, start sharing screen, and then I'll do the talk, or it's popping up. So I'm just going to expand my screen. So basically, as we expected, I'm just going to zoom it in a bit. This is the price in ringgits, BMT crude palm oil price. As we expected, there was a pressure on palm oil prices last week. And the key reason was the stronger than expected increase in supply, but mainly in ending stocks in Malaysia. So I'm just going to go to our widget to show it quickly. So I'm just going to go to supply and demand, and we'll choose palm oil. And then I'll choose Malaysia and unclick production, import, consumption, just to keep stocks. So you can see this rising trajectory, and basically this year stocks are stronger. As you can see, just comparing it with the historical data, stocks are stronger than at any other moment last year's, because of the good production this year, but also very bad export performance in November, right? So basically the market was expected the palm oil ending stocks to increase by, let's say, 8 to 10%, but the increase was eventually 13%, which put the pressure on the prices. This is about Malaysia. And in Indonesia, the situation is similar-ish. We checked some of the Western lineup data for November, and exports from Indonesia declined by around 16%. So in this case, we see that the demand for palm oil has been poor in November from both Malaysia and Indonesia, whereas Malaysian production, we don't know yet about the Indonesian production. So while Malaysian production was good, which created these higher stocks and price pressure.
So higher stocks, low demand. Do you think this bearishness will continue for a while?
So I recently checked some numbers by Maybank, which said that in December, right? So these were the numbers for the end of November, but they say that for the end of December, stocks might continue rising because of the very poor export performance, and we sort of saw it in the weekly shipments. So the first part of December, exports were 16% weaker compared to the same period in November. So exports look weak from December. However, we haven't had any hints on production yet. So it's a bit maybe too early to say for December, but because of the Maybank's message, it might mean there is some potential bearish risk for the prices. But for the longer term, January onwards, and some people say December onwards, but because we're already in the mid of December, maybe safe to say January onwards, palm oil prices could start recovering because of the seasonal drop in production, festive demand. These are usual things. But what is a bit, let's say, less usual is very low stocks in India, which is the largest buyer, and also attractive palm oil price compared to other oils. And both of these factors will likely mean higher demand and lower production. So yeah, I would say, let's say, given some early hints, December prices could be maybe moving sideways or a little bit down, whereas January onwards, there is a higher upward price risk.
Yeah, and if I hear you correctly, it does mean that we really need to pay attention to both supply and demand side. That's not going to be a very clear massive deficit or surplus into the market yet.
Not yet exactly. You are getting some hints, but so far it's not very clear yet.
Okay, balanced story there. If we close off palm and we have a look at the soy oil situation, how's it looking? I see prices have kept going down.
So I'm just gonna share my screen again, and then I can show, for example, so I will show CBOT soy oil, but in this case I can show crude soybean oil Argentina, which is also a very important benchmark. And I can show it in our forward price positions. So I'm just going to unclick sunflower oil crude and keep only soybean oil crude. All right, and I should have got USD currency. So here you can see that for all the positions, the prices have been going down. The situation is the same for the US benchmark. And the key factors for that were bearish soy price in the United States, and some of the, let's say, higher stocks reported by NOPA for the US, for the soy oil specifically, but also some news related to Argentinian export taxes and Indian cancellation. So if I elaborate a little bit, the bearishness of the soybean is coming from the fact that Brazil is very competitive at the moment on the volumes and prices in terms of sales to China, and US is basically, it looks like it's not managing to sell enough of its soybeans to the largest buyer, and basically quite some experts say that US will end up with significant stocks of the soybeans. That's one of the factors. Another factor, as I said, higher soy oil stocks by NOPA for the United States, which a little bit breaks the story of the previous couple of months when the demand was very good, and despite higher crush, soy oil stocks were either stayed stable or increased a little or decreased a little. Basically, there was a strong demand within the United States for the soy oil, but now, based on the higher soy oil stocks, it's not the same story for November. And also, as I said, it's because of the Argentinian and Indian situation. So for the Argentina, the government is planning to reduce export taxes for soybean and soybean oil, as well as meal, which will make prices lower, more competitive. And finally, for India, because of the news regarding the cancellations, which are not super fresh, but still it was a strong impact on the markets. There was a story that 1 week ago, or let's say 2 weeks ago-ish, India announced that it would buy a lot of soy oil volumes to make sure it has secure supply. But then after the news, prices jumped. So it happened, I'm just showing on the screen around that point. And after that, Indian buyers said, all right, price is too expensive. We're going to cancel some orders. And once the news about the orders cancellation came out, prices, of course, went down. So basically, yeah, there has been multiple factors pressuring soy oil prices recently for both Argentina and United States.
And this, of course, has been a super tough market throughout the year. I believe it's not been an easy one with what's happening in the US. This is the forward prices positions widget, and I really love this widget. That shows you the position, the development of the positions for 6 months in one go. But if we were to look
Mhm.
at the market structure on the overall market structure on the forward curve, where would you then go?
Mhm.
Which widget do we
Yeah,
choose?
so in this case, we need to go to forward prices. That's the literal name of the widget. And here, if we want to have a look on the forward curve structure at the moment, so here I chose Argentinian one, and you can see that, and Argentina is the largest exporter of soy oil, of course, globally. And you can see that the market is in the backwardation mode, which means that the nearby prices are higher than the more deferred prices, more distant prices. And that's because of the expectation of the Latin American supply, which will come Q2-ish to the market and pressure prices. That's basically in this widget, you can see which positions look more attractively compared to other positions. You see whether you should buy now or wait a little bit, or whether you should buy for the deferred positions or for the nearby positions. And to check it for the futures prices, for example, Chicago soy oil, you need to go to the futures section. And in the futures graph, you need to choose soybean oil. And yeah, here is your futures curve. Yeah, previously it was forward curve, now it's futures curve. And you can see that the situation is the opposite for the US soybean oil. And that's because of the biodiesel policy, which will basically lead to the result that most of the US soy oil will be consumed domestically, and there will be likely no exports, maybe even imports a little. And this means that the further you go into the season, the higher the demand is, because the policy will be applied in 2026. That's why you see the contango mode, where the nearby prices are lower than the more deferred prices.
Yeah, that's I think a good also widget walk around. And I think a key differences between the futures and, well, the futures everybody knows, these are the exchanges, the prices that we know. But the good thing about the forward prices, these are made by Vesper together with a network of brokers who give us input on a daily and also an intraday basis, allowing us to make, well, forward curves of only physical business, well, for up to 16 months ahead, depending sometimes on the product, sometimes shorter, sometimes longer, depending, of course, on the market liquidity. So it's a great feature also to have alongside of the futures, also for destinations and products that don't have a futures exchange. And if you want to be sure there's only physical demand on there, so that's a really nice one there. I think that doesn't totally close off soy yet, but I do think it brings us to one of my favorite subjects, and that's not just the US, but that's biodiesel policy. I always love to have this
Mhm.
topic halfway through December. Can you tell us more on what's happening in the US?
Yeah, so in terms of the biodiesel policy, there are not too many updates yet. So we'll today maybe, as you mentioned, we'll touch upon not just on the US biodiesel policy, but also Europe and other countries. But in the US, yeah, I haven't heard any updates yet, which is making it difficult for the market and delaying the, let's say, the consumption spike for the soy oil, right? So it's difficult to plan for everyone, for the biodiesel producers, for the soy oil producers and suppliers, because even though there is a policy which is supposed to increase biofuel mandate in the US for 2026, there are no signature yet making it official, which is funny and sad at the same time for the market.
Or maybe we can move on to some other biodiesel regulations, the German ones. Um, we've heard that they might impact veg oil markets in both the medium and the long term. Can you tell us more about this?
Yeah, so in Germany, the situation is interesting indeed, because Germany is the largest consumer of biodiesels in Europe, which means it's the largest consumer of rapeseed oil, for example, yeah, for the biodiesel production. And why it is important. So in terms of the recent updates in the regulations, Germany said a few things basically. First, that it will cancel double counting for those who don't follow the biodiesel topics, double counting is when your biodiesel, for example, Yukomi, is counted twice towards the quota. So it means you need twice as less volume to close the quota, which is a bit of an artificial stimulus for the market. So Germany says no more of that, which means you will need more physical biodiesel to meet your mandates, which means you need more physical feedstock, such as rapeseed oil, to blend more biodiesel, to produce more biodiesel. Also, Germany confirmed that it will continue using veg oils for the production of biodiesel, because there were some discussions previously by, if I'm not mistaken, Green parties that they wanted to stop using food-related or materials that are suitable for food, for the food sector. They wanted them to be stopped using to be used in the biodiesel sector. That's the second thing. And the third thing that is Germany will apply stricter basically rules to the sustainability certification of the feedstock, which means that some of the, let's say, maybe not reliable feedstock suppliers will fall off the supply chain. And this means there will be less feedstock, some of the maybe less UCO, which means there will be, again, high demand for the rapeseed oil. So in practice, yeah, these regulations, they mean that the largest market in Europe will need more rapeseed oil. And for those who are interested and who want to understand how the demand could be developing in the biodiesel markets for the rapeseed oil, I'm just gonna choose some of the interesting prices that we've got. So first of all, we've got RME price, which is your rapeseed methyl ester. This is your biodiesel made out of the rapeseed oil. I'm gonna choose HVO, which is also frequently used from produced from the rapeseed oil. And also use cooking oil, which is the key competitor for the rapeseed oil in the biodiesel market. So yeah, I'm just going to choose them one by one. For example, HVO. So based on the price for final products such as HVO or RME, you might understand how interesting it is for biodiesel players to buy rapeseed oil. And based on the price of the competitive feedstock, for example, CIF-ARA UCO, which is used cooking oil, you can understand how competitive rapeseed oil is for the biodiesel producers. And based on that, you can maybe try to build your negotiation strategy with your suppliers or buyers.
Smart move, putting them in the price comparison. And price comparison there is a really great graph because you can combine any pricing source with any other pricing source. So it's also really good to compare different products, find out where there's patterns, track correlation. So that's a nice one. I see Gavin already pulling up the rapeseed prices, because that is also where I'm going to continue this my questioning line, because we were looking at Germany, but I'm also very keen to hear more about the overall EU rapeseed oil market.
Yes, of course. And here, just a quick note before I answer. Here you can build the spread, of course, using this button over here. Just go spread, just to see the evolution of the difference between some of the prices. You can do it for two prices. In this case, this is the rapeseed oil premium over UCO, right? And you can see if it's larger than last year or last month or last week, how it is evolving. Basically, again, to see how competitive rapeseed oil is in theory, for the biodiesel production. But getting back to your question, basically, because of the stronger rapeseed production this year in the European Union, ending stocks are stronger. Yes, so the seeds availability is stronger in the EU, not super strong compared to a few years, but stronger than last year at least. Talking about the supply, we've got in the production section, we've got the widget processing volumes, where you can choose and check, for example, fed oil numbers for the crushing. So you can see that, and I'm just going to choose 2024 and 25. So you can see that supply starting from July is actually looking not too bad. It doesn't look super good, but also what you need to check, I'm not going to do it now, but just to explain how I do that, you can also combine it with the imports, which you can check in our total import and export widget to see what was the production, but also what was the import of rapeseed oil into the European Union, and combine those. And in this case, I checked those numbers today in the morning, and rapeseed oil imports were strong into the EU, and combined, crush plus imports gave pretty good supply so far within the EU for rapeseed oil. So for the demand side, supply of seeds is good, supply of oil is also good, but rapeseed oil price is strong because, as we discussed in the previous sessions as well, because the sunflower oil is very strong. And of course, rapeseed oil is traded at a certain discount to the sunflower oil, but still, sellers try to keep this discount to the minimum, and the rapeseed oil price definitely follows the movements of the sunflower oil price. So that's why, even though the demand is good, the supply is good, the physical demand is also good because of the sunflower shortage this year.
Yeah, and I think that also with the correlation media, I think it's really good to look at the sunflower market, and especially the production side with the shortage. I think a bit of a sensitive topic this season. What do we know?
Yeah, so on the production, indeed, estimates, forecasts come every month, every few weeks, because instead of having a surplus of the seeds, we are having a deficit now practically. And USDA recently published its production estimate for this year, for the season, which was slashed by 2.5 million metric tons globally, which is a lot. And eventually, sunflower production this year will be lower than the previous year, just for the whole world. Beginning stocks are lower as well, so that gives us quite tight sunflower supply this year. This came from the USDA, but also local consultancies in Ukraine and Russia, two largest suppliers of sunflower oil. They keep reporting on the decreases, at least for Russia today. I checked some of the numbers, and they showed the 200K decrease of the production estimates compared to the previous month. And based on also lower beginning stocks in Russia as well, the supply will be lower for the seeds. So basically, these were the two key news for me for today to use in the report. So the supply updates from the USDA and from local consultancies. But also what was very interesting, I'm just going to show it on the graph, is the behavior of key consumers for the sunflower and sunflower oil. So on our webinar agenda, we put 5 for the sunflower, which is kind of true. Because, for example, Turkey, which had a deficit this year, and this is a big consumer and producer of sunflower oil, has been massively importing seeds in October, but also November numbers I know will be quite high. And where it was pulling its numbers from, it was pulling it from Romania, right? So what it means that for the EU, which also has quite tight sunseed supply this year, pretty bad production, the situation is becoming even tighter because Turkey, as I figured today, has been paying very good prices for the European sunflower and just basically draining the stocks of Europe and making the situation tight, not only like in Ukraine and Russia, but also in Europe. Which was also interesting for me to see.
So we're looking at a tight sunflower supply, both supply driven but also demand driven. it's finding a home somewhere.
Exactly. Yeah. So basically, there is a fight for the seeds domestically in countries, for example, in Ukraine and Europe, because you have a huge crushing capacity, especially in Ukraine, which just doesn't have enough material to work with. So they have to pay higher prices for sunflower, which makes your sunflower oil production more costly.
Okay. Well, we come to the business end of this webinar. It's going to the outlook part. As we're already on the topic of sunflower oil, what do you believe to be the trajectory of sunflower oil prices?
So yeah, basically the market is now trying to find the silver lining in the Argentinian crop, which will take place will be harvested in Q1. That's where I think in February-ish prices might correct for the sunflower oil. It's a bit of a question to what extent, right? But the market anticipates the correction. In the longer term, I expect the sunflower oil price levels to stay above the levels of the last year, which doesn't mean there will be only the upward direction. It could be, up and down. But overall level, let's say overall level for May, overall level for April will be higher than last year, just because of the very, significant shortage of sunflower. And also some of the tightness in soy oil exports and potentially palm oil production in Malaysia and Indonesia. So that's our view on the sunflower oil. With regards to other oils, palm, rapeseed, and soy oil. So for palm oil, as we already mentioned, December could be flat, maybe a little bit down for the palm oil price, but since January, there could be an upward price risk there. And for the longer term, for the overall 2026, there are some upward risk factors, such as biodiesel policy in Indonesia, potentially lower production in Malaysia and Indonesia. Basically, these are two key factors. This is for palm oil. For the soybean oil, situation is similar in the sense that there's expected to be a strong demand domestically in the US from the biodiesel sector. For the soy oil, there is expected to be demand for biodiesel in Brazil domestically, and also, as some people say, Argentinian soybean stocks could be getting tighter till close to the end of its marketing year, which means there will be less material for Argentina to crush and supply in the form of oil. So we think that short term could be maybe sideways-ish, whereas longer term could be more upward movement. And for the rapeseed oil, I think it will be looking at the sunflower oil largely, because these are two key oils in Europe competing for the food demand. So we think that potential declines in sunflower oil price in Q1 could impact your rapeseed oil too. And whereas, again, longer term, I think overall tightness in the vegetable oils, lower palm oil production in key countries, sunflower shortage, potentially slower exports of soy oil because of the consumption for the biodiesel domestically could be helping rapeseed oil to stay strong. But I think naturally, because of the better seed supply this year, rapeseed oil can keep some discounts to other oils. So I mean, especially sunflower oil, just because of the larger seeds availability.
Yeah, I think that's a lot of products we covered there in one go. Are there any other of the key oils you wanna still say anything about?
Yeah, I would say these are the key ones. We will try to cover lauric oils in our report, which will come tomorrow. Today, we still need to process some of the data. In the report, we will, of course, as usual, include the outlook for the lauric oils, such as coconut oil and palm kernel oil.
Good. So for the deep dive, you need to head back to the platform tomorrow. German, thank you so much for your time again, not only today, but also throughout this year. It was great to have you. It was always a great 30 minutes to be updated on anything happening in the oils markets. Will you be back with us in the new year?
Definitely. Yeah, unless, of course, I will be. I'm just thinking if I had any other plans, but I don't. So yeah, so our next oils webinar will be in January then.
Perfect. We'll communicate the date with anyone viewing. I want to thank you all for joining this year. It's been great to have you along, either live or on the replay. Thank you so much. I wish you all happy holidays, and we hope to see you safely in 2026.
Yes. Thanks, Faiko. See everyone in 2026. Bye-bye.
Thank you. Bye-bye.